Do markets need to be pricing in a more hawkish ECB?
Well, I think any discussion around the PEP program, the Pandemic Emergency Purchase Program, should be viewed as operational discussion, because the real big question is around what would then happen when the PEP program expires in March next year. And in our view, the APP, the Asset Purchase Program by the ECB, still needs to be stepped up, because even though in the near term we're seeing this transitory kind of spike in Europe, as we have seen in the inflationary prints, in the medium term, I think in September ECB meeting forecast, we will still see that the medium-term inflation to be materially behind, materially below the target of the ECB, which would warrant greater easing over the medium term, especially compared with the Fed, where any kind of near-term spike in inflation can contribute towards making up for past losses, past misses. In the case of the ECB framework, they can let bygones be bygones, which is why medium-term inflation still below target should warrant greater easing, and in our view is one of the reasons why we are overweight European assets at this juncture.
Okay, that's one of the reasons that you've upgraded European equities. What are some of the other factors supporting that view?
Well, in our view, at this point of the global restart story, the momentum is really broadening out from the US to the other parts of the developed world, especially Europe. We see the baton of growth really getting passed over to Europe and to likes of Japan. And at the same time, the macro story is being reflected in the micro side as well, with earnings outward revision ratio in Europe very quickly catching up with that in the US. So because of this kind of tactical shift of momentum, we have upgraded further our European equity view from neutral to overweight, whilst moderating our view on emerging market equities and moderating our view on US equities from overweight to neutral.
Okay, when it comes to Europe, is this a cyclical play? Is it the reopening play?
It is very much a cyclical, tactical play. We have yet to make the big call that the longer-term preference is for Europe. But in the near term, because of this kind of passing of the baton, we think that European equities stands to benefit. But to make that longer-term call, we need to be comfortable with some of the structural challenges that European equity markets have faced over the years, and that is a bigger call in our view. But tactically, we're comfortable with our overweight in Europe. We do see that the restart story has further room to play out, especially as vaccination progress really starts to catch up and accelerate.